right, welcome everyone. We're back. The 5ers Live Trading Room. It's Monday. Finally, we're back. I'm back in the office. I'm back at work, and my life feels complete again. You know, as a trader, we're always waiting for that Monday to come along. Hopefully, you're feeling the same, Victor. How has your weekend been, and everyone watching as well?
Hello, everyone. Yes, my weekend has been great. Actually, I had a very relaxing Saturday, something that I don't
Nice.
typically have, but I think it's good to recharge and to reevaluate, right? What did go well in the week that passed, and where should we be putting focus on? And that's what I typically do on the weekend, since I don't trade on the weekend. But it was great.
Yeah.
I'm full of energy, ready
You
to
know what I
hit the
did on the
markets.
weekend? On Saturday morning, I turned off my phone and my smartwatch, and then I turned it on um, Saturdays. Right, before going to bed on Saturday. That was like that was really good, actually. I do highly recommend to people to do that. I read this book called Dopamine Detox, and it's a really good thing to do, sometimes, is to turn off every electronics out there, that you have, and just take a day off from social media, take a day off from thinking about work, thinking about trading, all that sort of things. It's really helpful. It's not, I mean, I gotta tell you, man, I don't really see myself as someone who's am I lagging? Seems like I'm lagging. Oh, okay,
Not to
I'm back.
me. I'm
Ooh,
not
look at the
sure.
fire right there. That looks good. Anyway, yeah, I do highly recommend just disconnecting for a day. But like I said, I don't really see myself as that type of person who's like on my phone all the time. But it was difficult, because I was like kind of I was reaching down my pocket. I'm like, there's nothing here. Because I have this
I think
automatic, we have these automatic, it's
habits.
like muscle memory. I'm just, I want to pick
Yeah,
up
yeah.
my phone. If I'm bored, yeah, I'll pick up my phone. That's not
That
good,
that's
man.
the
That's not
importance of
good.
having that's the importance of having good habits, because when we stop thinking, there's a lot of things during the day we do on the automatic pilot, right? We do them automatically without thinking, and these things that we do automatically should be productive things, or at least good things, and not necessarily, not those other things, because with the phone, which is, I mean, who can argue? The phone, your smartphone, brings so many possibilities, so many things you can do that we couldn't do before. It's a lot of opportunity, but there's also that risk of information overload, or losing yourself in trying to do a lot of things but not really be very effective. So
Yeah, definitely.
I think it's good to be critical about how do you go about employing or implementing that, using the time you have to do the actual goals, right? Be goal oriented, not just pick up the phone because you do it automatically. But why do I picking it up? What do I need to do with it? Thinking consciously about it, just to make sure that you're not just filling hours with the smartphone in your head, scrolling, and that's in your hand, not your head.
Yeah.
And
Okay.
that's the thing that happens with social media, right? With Instagram, you can, if you don't watch out, you can go on and on and on watching things which is entertaining but not exactly productive.
Exactly. Okay. One thing about the giveaways, I do see that you're asking about the giveaways, and I understand giveaways are awesome. We all like free things, and I do as well, of course. But today, if we're going to be able to be eligible for the actual giveaway, we have to get the like numbers up. So today, I'm trying something different. As soon as we hit 150 likes on this live stream, I will go out with the secret code and the link, and I will draw the winner. So make sure that at 150 likes, that's when we do the giveaway. So actually, what I'm going to do is I'm gonna actually write the code for the giveaway in the comments. You can go into the giveaway, you can get everything set up. But if we don't get 150 likes, not gonna be any giveaway. Okay. So make sure that you also hit the like button. At 150 likes, we will do that once again. The accounts that we do give away is boot camps. High stakes, Hmm. Oh well, maybe. Not today though, but yeah, well, I'm definitely gonna be looking into that. I want to before we yeah, let me get the code first. Let me go to code for today's giveaway. It's the 16th. It's Monday, and the secret code is probability. So I'm gonna be writing that in the comments as well. The secret code is probability, and you have the link in the you have the link in the could you please tell us why? I'm very interested to see why the bootcamp account is not working with your game plan. I'm really interested to hear why that's not working for your strategy. I mean, we do have other accounts, of course, for other types of trading. So really interested to hear about that. Yes, M76BB, our fellow in-house Bitcoin whale, is absolutely right. Tell your friends, tell your family, and the cat next door. Um, okay, so with that said, let's talk about the upcoming news week because it's not any normal news week. Let me first bring this up and show a little winner here casually. Not really what I wanted to do. I wanted to bring up the actual news week right here, but look at that winner.
Nice.
Okay, let's see. These are the news we have coming up this week. So as you see, it's we got a quite a big
We do.
week coming up.
Yeah.
Now, I'm not trading based on news, right? But I'm trading the same markets as where you have these news releases. So obviously, it makes sense to track when the news releases are coming out. So right now we have CAD CPI coming up in about 20 minutes. Now, that's not really going to be super important for me because I'm not in any positions right now. But what I do care about is making sure that when I do have an entry trigger, I want to make sure that I'm not entering that trade right around the news event. Depending on what news event it is, and depending on my stop loss, the wideness of my stop loss, if you will, then I might take a trade depending on what news it is and how big my stop loss is. If I'm swing trading and I see I have a stop loss of, maybe 60 pips or something like that, and it's perhaps I don't know, like a speech or something like Powell's speech, then maybe I would take that trade anyway. But if I see an entry trigger around, for example, on Wednesday on the FOMC statement or perhaps the press conference, obviously I'm not going to take that trade because we know that FOMC statements, FOMC press conference can be quite massive. You can have very, very big moves and you can actually change the whole perspective of the markets and the trends. So for me, it's very important to understand when are these news events coming. And as you can see right here, from today all the way through Friday, we have major news events for some we have right now, we have Canadian dollar, and then we have the core retail sales for the US coming up later, actually at the same time. So it's at the same time in 20 minutes, we have core retail sales from the US. And then tomorrow we have the FOMC press conference and statement. And then we have on Thursday, we have unemployment claims for the US as well. And then on Friday, we have the Bank of Japan press conference and policy rate. And I do think that the Bank of Japan policy rates decision might actually be quite important because we saw last time that huge move from the Japanese yen. So a lot of things to keep on your radar here, even if you are trading news or not. Make sure that you at least check out this news calendar. This is the Forex Factory news calendar. It's also the Forex Factory news calendar that the risk team at the 5ers are basing their decisions on. So if you look at perhaps TradingView, okay, so let's say you look at TradingView and you have a news event that's marked yellow in the yellow folder, and you're trading on that news within the time limits on the high stakes account. That means that you're it could be a red news folder on Forex Factory, but a yellow folder on TradingView. So make sure that you base your decision on the Forex Factory calendar, because otherwise there might be a difference in what you're viewing and what the 5ers risk team is basing their decisions on. So make sure that you check the same calendar as our risk team is doing. With that said, I wanted to just go through our plans for the upcoming week. And I wanted to ask you, Victor, how this is a good question right here. Twitter was blocked in Brazil, not Brazil, Brazil. Yeah, that I guess I'd use a VPN, but I don't know if that's legal. Probably not going to be legal. Probably going to be illegal, so can't recommend that. I would though, but I can't recommend you do that. What I'm going to do is I think I have to go in and I'll figure something out. I'll figure something out when I'm going to be doing the draws. And by the way, everyone who won last week's giveaway are should have been credited with hub credits in the 5ers hub. So congratulations to you guys. You're free to use those credits to buy a bootcamp account, or you know what you can do, you can also get whatever account you want, but then use the credits to get a better price on that other account. So it's not, you're getting credits, you're not getting a specific account, you're actually getting you're getting virtual money to use on a
I think that's even better because you have the flexibility to, some people might want something bigger or something smaller. I don't know. But having the credits is much, much better.
Definitely. Oh, we got a lot of viewers in here. Amazing, guys. Welcome to everyone who's all just joining here, guys. For those of you who are wondering about the giveaway, make sure that you like the video, because we are going to initiate the giveaway as soon as as we reached 150 likes, and the secret word for the giveaway is probability, and you can also find it in the comment section, because I'm going to write it right now, and the link to the giveaway is in the description of the video. Right. So I wanted to ask you, Victor, how are you preparing for the upcoming week? Are you doing any trade planning on the weekends? Are you what does your structure look like to prepare for the upcoming week?
I don't look at the week ahead. During the weekend, what I do is I look at last week. How did I perform? How big is the gap between my strategy and what I actually got in the market? Was there last week I had some slippage, for example, and one of my losses were supposed to be 2R, two trades that were stopped out were supposed to be 2R, minus 2R, but it turned out to be up 5.5 between them two. Now, those kind of things are what I usually do on the weekends. I look over my week and see how was the performance, how was the execution, what can I improve coming week. So it's more focused on myself and my strategy and how well I was able to apply my strategy. The week ahead, I start on, let's say at the end of the week on Sunday, I just look at the week. What kind of week do we have ahead of us? But that's like 5 minutes. I don't really do anything about it. I just know in advance, coming Monday, I know that this week is going to be heavy with high impact news. So that means that I need to be on the ball with every position that I have, because I don't want to have what happened last week where my stop loss were triggered, but by the time I got filled, I was a couple of pips, actually more than a couple, worse. And since my stop is so tight, that's an increase in my risk. So it only means that when I have to be extra careful to be when I have positions on to make, because what I do is I don't stop from taking the trade because there are a lot of news. I know from how I trade that actually the news is what I need, because it is within the news or during the news that the bigger moves are initiated a lot of the times, moves that I want to catch. So the news is not bad in itself. I don't want to avoid it completely. But what I do know is that the volatility that comes with the news, that may be a risk for my how I trade. So if while I'm in the trade, if the news is coming and it's only a couple of minutes, let's say 20 minutes, 15 minutes to the news, and I'm still very near my stop loss, that's a risk for me, because if it goes against me, there's a high chance of me getting slipped, and that's something that I need to avoid. So that's the only thing that I have in mind, like identify what days and what event are likely to do that, and I need to be very careful with the open position if the news is coming and I'm not far away from my position yet. And one of the solutions I have is I close half the position before the news, so that I have my risk. That is one idea. If I have enough room, but not if I have some room but not enough room, and if I don't have, if the distance between my stop loss and current price is very near, then I close it completely, and I don't want to have a 2 hour loss, just because I want to be part of the news. I need to be sharp that all my trades that go to stop loss, that they have a 1 hour loss, maybe 1.1, maybe 1.2, but not two, and anything above of much more than just one.
So what you do is you're basically not you're so the way I do it is I scan the markets, I go through the market, I make plans for the coming week. But your way of preparing for the week is looking at your past trades.
Yes.
Nice. Okay, so that makes perfect sense. And I see Henry right here says also he's going to take the weekend to back test and go over my journal. That I love that. I love that's music to my ears, or candy to my eyes, because I'm looking at it. I'm actually not listening to it. Whatever. And Henry knows exactly as well how I do my trade journal review, because he's actually one of my students, one of my private students, who I'm actually giving personal guidance to, and it's very cool
Nice.
to have him in here. Anyway, so. I showed him as well also, how I do my trade journal review, and it basically takes me about 20 or 30 minutes. I just go through the trades from last week, and I basically ask myself two questions: what did I do? What did I do right, and what did I do wrong? And I will continue to do what I did right, and continue to do, try to not do what I did
Not
what I did
continue.
wrong. Yeah. I want to comment on this as well. You see this right here. This is from Prop Firm Match right now. The 5ers is currently at number 1, the first spot for Prop Firm Match, which I would like to thank you all. Just take a minute to really thank you all for giving us, giving us these reviews and helping us reach the top with the Prop Firm Match. Yeah, words cannot explain how happy we are about this, and we're every day we're constantly working to deliver the best trading conditions for you guys, the best customer servers, and building this amazing community that we got right here. And I think you all here deserve the number 1 spot as well. And it's not this. Obviously, it's not possible without you guys, because this is driven by the actual verified customers at the 5ers. So this is really cool to see right here. What I want to talk about is just give you guys a quick overview of what I'm looking at ahead of this week. So to give you guys a very quick idea and a simplified version of my trading journal review this week is, well, actually what I do is I have a pen and paper journal here. I try to make all the notes I'm taking in my trading. I try to use a pen and paper journal. I know a lot of people, they use the function within the trading journal digitally to write everything in and take notes. But the thing is, this is proven a lot of times, that when you actually write down your thoughts, you'll remember them and you'll learn from them in much more effectively than if you would just write on your computer. So I highly recommend that you have just pen and paper on your desk, and you write down your thoughts about your trades. And last week I took 4 trades, right? Fairly bad week. I did lose more than necessary because I increased risk right before the loser, but I'm just down 1.5 hours. It's not really a huge problem. But what I did right was I went through and what I figured out was I actually entered 2 trades based on FOMO, which is not really something I normally do. It's not like me to enter trades based on FOMO, but I did, and I identified what I did and what problems I did, and now I'm moving forward into this week knowing exactly what I'm not supposed to be doing. And it worked. First trade we took here on NCD CAD, I woke up 7 a.m. No, I woke up like 6:30 in the morning. This candle is closing for me, the 4-hour closing at 7. This is my trade. This is my plan. I made plans on the weekends. I said we have a key level here on the daily. We have a breakout right here, very clean breakout, and I would like to go long here if we have a confirmation of a bounce, which we had perfectly here with that 4-hour bullish engulfing candle. Got filled on that one and went straight to TP. So now that the first trade of the week is done and that's a winner, I'm looking at the statistics of my system and I ask myself, what's my average number of trades per week? And my average number of trades per week, when I look at the good trades, okay, ignoring the bad trades, because some of the trades I'm taking, it's not part of the system. Okay, so that's important to remember. Remove the trades that are not part of the system. Look at back testing data, look at forward testing data, look at live testing data for the trades that are actually part of the system. And I see that I have 2 trades on average every week, which means on average, I'm only going to get 1 more trades based on the system. So thank you, Henry. Gold star for you. It's an outside bar at that one. So the only 2 trades that I'm really looking for this week is Euro NCD, and what I'm looking for here on Euro NCD is we had a big break to the downside on the daily. We're coming up and testing a major resistance area here on the daily. Looking at the 4-hour, we have a range forming on the 4-hour. And I would love to see a break of the range low right here. If we have a 4-hour candle close below this level, I'm going to initiate the trade and I'm looking to take it down to that level. That's one of the trades I'm looking for this week. Next one is NCD CHF, and this one is actually about to confirm. What we have here is a daily level. This is not super clean, but we have a daily level right here. So this is the blue horizontal right here. Have a daily level. We came up and we reclaimed that level. We have a very, very strong reaction at that level with that bullish outside bar. And I love these types of outside bars where it's a big wick to the downside. A bullish outside bar with a big wick to the downside tells me that there's a lot of buying pressure coming out here. We get a breakout on the daily. We're now retesting that breakout level on the 4-hour and printing a range, okay? If this 4-hour candle can close above here, you see you had a breakout, but it's coming back down with that wick. If we can close this 4-hour candle above the range, I will take this trade right here. Enter on the retest of the range highs, stops all the way down here because we have a lot of news coming out this week. I want to be making sure that I have a lot of room for error, and then I'm just going to TP at that very high right there. And that's all. That's all I care about this week. If one of these trades activate and I get a trade, good. If none of them activates, that's okay. I have 1 trade, 1 winner, and these are the only setups I'm seeing right now. So for me, it's either I take these trades or I take no trades, at least from the way I look at the markets right now. And that's the problem that I'm having. Well, actually, that's not the problem. But the problem I'm having a lot of times with trading is I'm taking a few trades anyway, I'm not, I'm not getting these trades.
You mean more than you intend to?
Yeah, what I mean is I'm taking a few extra trades, even though I'm not, I'm taking a few extra trades. So if these trades want to activate, I'm going down to this list and I'm going through and I'm like, where's the trade? Where's the trade? Where's the trade? And then I find something where it's like, oh, you know what? This might be a trade. I'm going to take that trade because this kind of looks like a trade. I take the trade. It's a loser. I look at my journal. I'm like, what am I doing? This is not even according to the plan. And most of the time, you'll see that these trades would have worked out perfectly, So I make the plans on the weekend. I'll look at my journal. What am I doing right? Continue doing that. What am I doing wrong? Stop doing that. Make plans. Stick with the plans. Is it Hamid or Hamid? Ahmed? Hamid? I don't know. You might remember, Victor, because we had this conversation a while back trying to pronounce his
I
name.
think it's Hamid.
Hamid. Okay, Hamid. What about the scalp account? Yes, thank you. And I'm sorry about that. I'll make a note. I'll make a note in my journal what to do, how to pronounce
with
the name.
pen and paper.
Yeah, with pen and paper. That's right. Yeah. So, what about the scalping account? No, the scalping account is. I'm not really taking that very seriously. Okay, I'm not. I'm not even journaling that. Okay, I'm not journaling that. It's not worth it to me. It's more of an experiment. To have fun with during the live stream. So I'm not journaling that. I'm not really going through the same process. Like, I'm not making any money on that. It's an evaluation account. If I go through the evaluation, sure, at that point, maybe I'll take it more seriously and journaling and things. But I know that I'm not a scalper. Like, I know what I'm supposed to be doing. I know the type of trading I'm supposed to be doing. So there's not really any major point in me focusing too much on that, right? But it's fun. That's the thing. It's quite fun doing that. So I'm going to continue doing that throughout these live streams. When I'm not seeing a trade set up, when nothing's happened, I'm going to go through that and do some live trading. All right, what else do we have here? I do actually have a structure for today's live stream. Believe it or not, there is a structure. And let's do some questions, okay? Let's
Great.
go through some questions here. I'm gonna be going up. I see that you've starred a few
Yeah. That's what
questions here.
I was going to say. I did have a couple of questions already.
I will go through it here, see if I can find something. Yeah, the code again is probability.
Which
Okay,
is
let's.
in the chat.
What about this one? News or just distraction?
Well,
No, I mean, look,
dep-
news are. I mean, the news and fundamentals it drives the market. So I mean, that's what drives the market at this point. I mean,
yeah, I don't think it's just a distraction. I can imagine in certain strategies that, you know, like higher time frame where you're not supposed to be looking at the news or do anything with the information, and whether there is or not any news, you should be doing the same. Then in those strategies, I can understand that you would say, "No, it's just a distraction. I don't need to pay attention to it." But for everyone else who is not on those higher time frame, I think having a sharp awareness of the when the news are coming out and which ones are coming out and what is the typical effect that news will have is very, very important for your risk management. How are you going to manage your risk if the whole week and sometimes the whole month the price, moves a certain way, doesn't gap up or down, moves within a certain range per hour, let's say 20, 30 pips depending on your pair, but on specific moments, which in advance, it will have a range of 50 or 70 pips, two times or even close to three times the typical range. And where the execution will not, because everyone will try to go through the same door, the execution will not be the same, where there might be even gaps up or down. I mean, that is very, very relevant information and an event that you really need to pay attention to, and it's not just distraction. And a lot of the times the news can, like, big movements can start from high impact news, not all the time, but a lot of the times that can be the beginning of a big wave that can last days and sometimes even weeks. So I would say there's a lot of if you can, I know it's a beast, right? The volume, the volatility that comes with the news is a beast. It's very difficult to navigate, but when the dust settles and you are able to catch something and drive on that wave, surf that wave, I mean, that can be very, very powerful. I would say the news is very, very important. I wouldn't say just attraction. For some people, it may be, but no. And even if you don't trade the news and it doesn't seem to have any effect on your strategy, just because of what I mentioned about the risks that it brings to the table, you need to, as I said, mine strategy is doesn't depend on news in the sense that with or without news, I should be trading the same. But I need to protect myself from the volatility and the volume that comes in with the news, and so I still need to, even though it's not something that I use, it's not a component, I need to defend myself or protect myself from risks that come with high impact news.
Yeah. I have a quick question here. Yes. So, what is my risk reward? I trade with a negative risk reward. So usually my setups are half an hour. The thing is, it's not setups.
Static.
Yeah, the setups are half an hour, but I very rarely exit at 1 hour minus. So I can show you a quick like for this one here, right here. I mean, if you look at this, I have my stop loss all the way down here just to give, like, I'm looking at this level, and usually I want to look at what's the like most extreme level below right here. So I want to be below that level right there. But the thing is, the most logical way, the most logical area for the stop loss to be placed would be here. And now it's a one-to-one risk to reward. And I'm actually looking to exit the trade if it goes below here. So if I enter here and then trade comes all the way down here, yeah, I'm going to exit down here. The thing is, I'm going to exit based on most likely 4-hour candle closes, right? So if price comes down here and it's 1 hour until the 4-hour candle close, I'm not going to close the trade, because a lot of times you'll see that it's a wick and then it trades back up and the 4 hours is going to close above. So I will close the trade a lot of times based on the candle closes. But if there's like a huge move to the downside like that, I know my max loss of this trade will always be minus 1 R, and depending on what I'm risking on this setup. So you could say that a lot of times my trades are one-to-one risk to reward, but on average it's negative risk to reward. All right, what else? We have, what else do we have here? One more question before we move on. Actually, let's do 2 more questions.
There's someone asking if we're going to be doing the credits always from
Yes.
now on, or
we're exactly, it's going to be credits. So if you win credits equivalent, that word, that English word that you know what I'm trying to say, but I can't pronounce it, so I'm just gonna skip that. You're getting credits, and then you can use those credits for whatever account you want on the dashboard. So you could see that as a buy one bootcamp account, or use the credits as getting better price on another account. We got Barry, who got funded on a 100K high stakes account. That's awesome, man. That's amazing. If you want to come on here, live, talk about it, maybe show your progress, and if you're willing to show your face on camera, I'm willing to help you out here on the live stream. If there's anything you want me to help you with, maybe you get funded and you have some questions on, how to continue, how to best move forward with this funded account, you're free to come on the live trading room and we can talk about that. Might be beneficial for everyone to see. But huge congrats. If there's one thing I can, one tip I could give you is to wait a couple of days or even 1 full week before you take your next first trade on that account, because you want to because you're probably very happy now, which you should be, right? But for the next trade, you need to be balanced. You need to make sure that the the euphoria and the happy emotions that you're feeling now because you got the account doesn't turn into overconfidence. Okay, you made it to this stage most likely because you were consistent and disciplined. Becoming overconfident might hurt you in that sense. So we see this a lot. People get funded and then they blow the account because they're not trading the way they did to get funded, and they get overconfident because they'll tell themselves, now I'm funded and I know what I'm doing, and I'm a great trader, and you become overconfident and you start taking trades that are not part of your system. So take a break, come back when you've realized what's going on, and you're a bit more balanced and neutral. Wouldn't you agree with that, Victor? Or maybe you have another tip for him.
Actually, before I say whether I agree or not, I think the invitation is also for everyone else. If you're passing an account, you're getting
Definitely.
funded, any milestone that you're reaching, and you think, "Wow, finally, I'm getting somewhere. I'm reaching the goals." You don't have to be, completely funded and managing a lot, but if you see there is progress and you learn something, if you want to, that invitation, actually the invitation is for everyone. If you want to, you can come on our show, and you will have a chance of showing what you're doing, things that have worked and that may help others. But you also have a chance of getting tips, tricks, somewhat of a coaching from us, because we'll be able to look at your performance and give you some ideas what you can improve, and how you can, so it's going to be, you share your experience, and you get also that possibility of somewhat of a coaching session on our part, live on the show. Yes, I think, um, you know the same with in life. What's the definition of stress? People, when we think about stress, typically everyone will say it's something negative, right? It's you have a problem, you have an issue, you have maybe your health is not as good, right? You have bodily pain, or something that is bothering you. But stress isn't just negative, it's also positive. If you're very happy, that's also stress for your mind and your body. If you're very, for example, winning the lottery is very stressful for your mind, right? Meanwhile, it's considered, because you won something, it's considered generally positive, although in the long term it's typically isn't that positive. But so positive things can, if they are, the definition of stress is anything that takes you out of balance. So something negative that impairs you to function as a person is something that could be a stressor, right? But also something that is very, very positive, like reaching a certain stage from your account, funded stage, or perhaps your first payout. That can be a positive stressor, and but still a stressor. And as a stressor, it may um, change how you go about trading. And that is something you do not want to happen. If thinking about celebrating about the milestone will change how you trade, then there is a chance that you may not be as profitable in the future because you have changed something. And what you should be focusing is on maintaining consistency how you got there. If you gained or reached that milestone by having a level mind, by having calmness, by doing meditation, working out, whatever, focusing on being leveled, right? Then you want to keep on doing that. You want to keep everything leveled in a calm way, without too much of eagerness. Either way, not fearful, but as well not too much eagerness. And and that's what happens with a lot of traders when they reach certain milestone. They start thinking, okay, if I reach this and I did it in 1 month or 3 months or whatever time, okay, that means that in another 3 months I will be in a certain place, I will be funded. Or if they're already funded, they'll say, okay, in 1 month I will have this kind of money. If they already got one payout, they'll say, okay, I got it in whatever time frame. If I just keep doing this, I will have X amount of money or payouts. And that is good, but there is that risk where it's going to affect you, where it's going to be that positive stressor for your behavior, for your thoughts, and it may lead you to become too eager to trade. And in my experience, that's not a good thing. I've noticed that if I'm too eager to trade, I shouldn't be trading because I should be level. I
That's a
shouldn't.
really good that's a really good thing to I just want to highlight that if you're too eager to trade, you shouldn't be trading. That should be on everyone's mind all the time, really. You know what they say, trading is supposed to be boring, you know?
Yes, yes, I would agree because if you're getting too excited for any given trade, you probably are too invested in that trade. Either
Yeah.
the risk is too high or your expectation of that trade is way too high, right? You're expecting
Yeah.
something from it. And that's not a good position to be in because when that trade doesn't go to TP, and trades lose and win, there's no control in any given trade what the result will be. There's that randomness in the distribution of how the trades come, right? How the result, the sequence of the trades, the results. And when that trade that you have invested so much goes to stop loss, it's going to affect you. You're going to be down because you didn't get what you expected. And that's not something you want to start. That will start that little ball that will snowball into something bigger, into all those bad things that we always talk about that we should be avoiding, like revenge trading and over trading and things like that. It a lot of times it starts, or uh, it starts where we are too excited or we're too invested in any given trade or any given day or even a week, right? That's why when you get funded, it happens a lot of traders, right? They get funded, but now somehow they can reproduce the same results they had to be able to get funded, right? They get funded and they lose the account very quickly. It's because they are very invested in every single trade that comes on because it's real money. They can go home with, hundreds and thousands of dollars if they do it, you know, good. They do if they do it well. And that is a way to be invested higher than you should be, more than you should be, in the results of this trade, of this day, of this week. And that's not the place you want to be. So one of the things that I would say is, yeah, you should, if you're too excited about the milestone, it's better to be extra careful. Maybe skip a day, maybe even skip a couple of days. It's not going to change much in the bigger scheme of things if you skip a couple of days, right? It's
Yeah,
much
I think
better
that's
to do that, and avoiding losing the account or making a big dent in your equity curve, then those couple of days is well worth it, to just slow down and get back to evil. I mean, to not evil, to level. I was gonna say equal, like equilibrium, but I said
yeah.
evil. But not evil.
So
But I mean, is getting back to a balanced mindset where you're not too excited, you're not fearful, you're leveled, and you're able to attack the market as you should, with
okay.
calmness.
Evil, evil levels. Evil levels. That's my takeaway from this. Evil levels. Now let us go into the next section here of the live stream, which is the actual which is the actual title of this live stream is high probability setups. And I want to talk about that because there are some things that I believe is kind of like universal within technical analysis, and from my years of experience, there are some things that I'm looking at as higher probability, and I'm going to go through that. First, I want to talk about this that Henry just mentioned on Bitcoin, and he's mentioning WO and MO. And can you guess in the comments what WO and MO is? I'm going to give you a couple of seconds to guess that. The one who I'm not gonna give anything away, but so you'll be you'll be getting a round of applause. So let us know in the comments what is WO, and yes, that's right, WO. Alex is weekly open. Our second favorite Alex. That's right. Nice. Okay, you all know that. Perfect. Okay. So if I add the my indicator here, which has a built-in monthly and weekly open, just to show you where they are. Otherwise, I will have to add the specific indicators on. You have the WO and MO, the weekly and monthly open right here, and as Henry mentions, it's right above the price of Bitcoin. So we now know that that's an important level because the weekly and monthly open is a very important level. Now, when it comes to high probability setups, what is a high probability setup? Well, high probability means that there's a higher probability of something happening over the other alternatives. So, for example, price hits support. Now, you can ask yourself, if price is trading at support, what's the what alternative has the highest probability? Price bouncing and moving higher, or price breaking lower? Well, if it's a fresh support, then the probability of seeing a bounce is, in most cases, better than having a break lower. So you would say that buying at support has higher probability than selling at support, right? And there's some things that I believe is universal in technical analysis when it comes to finding high probability support. And I want you guys in the comments to help me out here. If you are looking, and the thing is, there's a theme here. Everyone that we brings on, this is true for Victor, it's true for me, it's true for Alex, who's probably trading from his phone on his motorcycle somewhere in either Africa or Europe. I believe he's in Europe right now. So let me know in the comments, what would you say is the single most important thing for traders across all levels when they're looking for high probability setups? Okay, let me know in the comments. I want to hear what you're saying here in the comments. It's going to be interesting to see what your answer is. If you want to find a high probability setup, what is one thing you have to look for? This is risk to reward, has nothing to do with it. A change in structure, that's good, but I'm thinking about something as confirmation is also good. Like, you're talking about things that are everything's important. Everything is important here. And patience as well. Okay, so I think all of this is very important. And then back test and history of that setup, also very, very good. And I think personally a trend. Yeah, I'm trying to find one thing though that I know that I do. I know Saul does it as well, and I know Victor does it. And I'm gonna give you here it is, Anna. Thank you. You're the first one. You're the first one. High time frame confluence, and not necessarily high time frame confluence, but multi time frame confluence. And we're doing something where we begin up here and we're moving down. And that is called a top-down analysis, okay? To find probability setups, Victor does it as well because he looks at a higher time frames order blocks, and then for entry he goes lower on the lower time frames. I do the same. I look at the daily right here. I look at the daily, and then what do I do? I go down into the lower time frames. When I have a daily level being hit, I go into the 4 hour. So I'm looking at the daily and the 4 hour. I have multi-time frame analysis and multi-time frame confluence, and that is in my opinion is the foundation of finding the highest probability setups. Now, you can add a few things to this, right? Another very important thing, which I believe is important for especially new traders to understand, is the role that horizontal support and resistance and market structure plays, as well as identifying trends. If you can trade with the direction of the overall trend, you will most likely have an easier time as a trader. So you want to look at key levels on the higher time frames, and you want to make sure that you can find confluence with the high time frame key levels and the lower time frames, and then take the trades in accordance to the overall trend. So let's take a look at Bitcoin. Okay, we're going to be focusing on Bitcoin on the daily here, because really, if you're going to be trading on based on a high time frame trend, and you zoom out to the weekly and you add the log chart and you zoom out, well, you kind of don't want to short this, but it depends on like your time frame as well. So we look at the daily, and we're looking at the this trend right here. Okay. Now this is Bitcoin, but it's true for all markets, right? So we have the trend here. We could all agree that yes, we have major lower lows, we have major lower highs. You could argue that equal highs here, but I think very few people would look at this and say, "Oh, that's a bullish trend." Not really. This is not very bullish. So we know that we're in the region of being neutral / bearish, with slightly leaning towards bearish, but we would not say that we're full on bullish at this stage. So if we're going to be trading with the trend, we want to short this, right? And you see, I had and let me go into you can also trade this long and trade with the trend, but I'll go into this in a moment. So what I see is I see a level here. Okay, I see that as a pretty decent level. I also see an important level up here, and I think this one is more important because it kind of goes through the middle of, if this would be a range, it goes through the middle of the range. It's what I would call a range EQ. It has more touches, it has more violent touches. The reaction to this level is more violent than the one below. This, what I would say, is a level with medium importance, while the one above is definitely a high importance level. We can make it a little bit wider. So I'm just going to remove that one. Now we're looking at the daily, and we have decent confidence here. We can go to the weekly as well, and we see that this is also a level that is somewhat visible on the weekly. You have the wicks testing it as support here. You have a good breakdown. You have some reactions here, and then you have that reaction on the weekly. So I would say that this is a weekly level. It's a daily level as well. And we also have the fact that if you add other indicators, like, for example, here on the daily, you have the daily 50 EMA, you have the weekly and the monthly open. So you have a high time frame level, and you also have multiple indicators at that same level. That also increases the probability of having a reaction. So what I would do in this case, and this is obviously a trade that I did not take because that was on I don't trade Bitcoin on the weekends, but this would have been a trade that I would be willing to take just on the daily. Stops above here, and then a 1.53 R trade down to that level. But if you zoom into the 4 hour, and here's the thing, I want to have confluence between the 4 hour and the daily as well. So I want to make sure that if I'm going to be trading with the daily trend, I want to make sure that the 4 hour is also showing me signs of a bearish trend. Looking at the 4 hour here, it's not really giving me clear signs. But if we get something like this, perhaps, where we might move like this, then that is the beginning of a possible 4 hour trend as well. Now, of course, it's a bit problematic here because that's support. If this wouldn't have been as clear, then this would have been almost a perfect setup for me. But let's see how price develops here. Now we have a good close here on the 4 hour. And if we get a retest here on the 4 hour, because again, this could just be an uptrend, right? This could just be an uptrend on the 4 hour. But we want to make sure that we see a rejection here and then a move lower. So maybe even put in a level here And now the trade becomes this. Okay. Because I'm just looking for a very, very small move down here. Because now what we have is if price continues like this, then we have a bearish structure on the daily. We have a bearish rejection at high time frame support on the daily. We have and we're also breaking structure on the 4 hours. So the 4 hour is bearish, the daily is bearish, and we're breaking structure on the 4 hour. These, in my opinion, are, for me at least, one of the highest probability setups where you have the 4 hour trend aligning with the daily, and there's a break in structure and a clear confirmation on the 4 hour. The problem that I see a lot of people do is they enter here on the close of that candle because they see this as confirmation of the daily setup, and that's true. This could be confirmation of the daily setup, but you're still trading, you're still shorting an uptrend on the 4 hour. So you might short here, stops above that one, and then stops maybe down here, and this might even be a fake out. You get stopped out, and then you'll get this. This happens very, very often. So this is where patience comes in. Have an idea of market structure, trend, horizontal levels, and a break of structure, and be patient enough to actually wait for that structure to break and wait for the confirmation that you're looking at. So that's my tip to you guys when you're creating your system and you're back testing your system. I would also highly recommend that you go on YouTube and you Google the 5ers back testing template. You will get a live stream where we are talking about back testing, where I also give you our back testing template where you can actually get statistics on this, because it's not just about looking at this live stream and then go out live. You need to try this out and actually test it. And one way of doing that is to use a backtesting template and actually look at the statistics of what it's bringing you. How many likes do we have? Oh, nice. We have many likes. It's time for the I think it's time for the giveaway. So what I'm
It
going to
is.
do for the giveaway is I'm going to do first, I'm gonna lower my desk here. I'm tired of standing up. All right. All right. What I'm gonna do is I'm gonna give away one account now. And if we hit 200 likes, I will give away one more. I don't think we're gonna hit 200 likes though. But if we do that, I will give away one more account closer to the end of the live stream. How we make? Did you just pull? How do we make 1,000? Okay. Yeah. There's many ways of doing that. Trading is. Oh, you know what? There's many ways. There's easier ways to make money than trading. I think it's important to remember that trading is not an easy way to make money. People think that it's like, oh, you just get funded. You just get funded and all your problems will disappear. Yeah, you know what? Most of my problems actually began when I started trading. you know, holy, it's not easy, man. The learning phase of learning how to trade and all the frustration that comes with that is just insane. Before
I think they're right though. Just get funded, and in the sense that yes, getting funded is part of the solution. But
yeah,
I
if
would
you
say
know how
it's
to
much
trade,
more than
definitely.
that. It's getting funded and keep on consistently producing profits, and that's where it gets difficult for a lot of traders. A lot of people can get funded, but if when you start getting the statistic, how many of them are still funded after 1 month, after 3 months, after 6 months, and how many of them are still pulling profits out, the percentages, which was already low for who gets funded, they get even lower when you task them for consistency. So the key to get to reach those financial goal is not only to get funded, it's also to maintain that account and consistently be consistently profitable, and that is way more difficult than most people know. It's not
Yeah.
it is possible, and there is a way, but it's a journey, it's a process, and it takes time, and not everyone is cut for it. But yeah, it's not easy.
No, not easy as well. Okay, so we have maybe maybe Victor, you could.
Do some analysis, some euro
Yeah,
analysis.
maybe you could, yeah, exactly. Maybe you could look at EU and GU and do, write out what you think the market structure is on those, and I'll prepare the giveaway.
Yes, I think that's a great idea. Let's look at EU. Let me see if I have the correct price feed. Yes. All right. So, without going into too much details on the higher, much higher time frame, the only thing I want to say is that we were, not we, but the sellers were selling these areas before, right? Hence the bearish structures. And we have seen a shift in the market's intention by the creation of these bullish structures we see below us, and we had followed through from them. So they're not just bullish structures, but they are bullish structures with follow through, meaning that they are much more relevant, and we should pay a lot more attention to them. And as they are getting into those bearish structures that we had before, they are not, at least not yet, and but they're not telling any signs of slowing down, or and for sure not reversing. So if you follow the current momentum, right, it's to the upside, even though we had these structures which are still valid. But I mean, the momentum, current price action is what we should be following. We go to a lower time frame. What do we see? We have broken, right, and close on the weekly. We close above the monthly order block. That means that it did not invalidate the monthly yet, but that's a sign in the direction where, this monthly was not able to impede that, to avoid that. That is a sign of weakness in my mind. What else do we see? We can see on the weekly that we have been forming bullish structures, outside bars even here, and we have last week we have a very beautiful pin bar that was formed. And so there isn't anything bearish about current price action from this point of view, right? Even if you include this low, right, we're making higher highs and higher lows. So on the higher time frame, it looks like everything is set for a continuation of what we've been seeing the last couple of, how many is this? This is from mid-April, more or less. So everything
Victor, I'm just
looks
going to
like
take a
very.
couple of minutes break. I'll be back just in a very short. Okay.
No problem. Take your time. So what do we have? What else do we see? Besides that, so on the monthly, it looks that we have switched and we're maintaining that bullish momentum. On the weekly, there are no signs of any bearishness. So both of those higher time frames is firmly bullish. The daily is also, you can see that even though we have made, we're making lower, right? We made a lower high, and it's confirmed by taking this low. So we are in a possible. Let me get that out. We are currently in a downtrend on the daily, right? In terms of market structure, we made a lower low, a lower high, and a lower low. So that satisfy the definition of a downtrend. But if you look at everything from to the left from that high, you can appreciate that so far it's only a counter trend. Even though it's a downtrend in its own, it's a counter trend of a bigger structure, right? So this is, we've talked about this. It is a, yes, if you consider just the highs and the lows, this section is a let me get some point. If you consider only this price action, right? Let me get that straight. Yeah, if you only consider this part of the chart, yes, we are in a downtrend on the daily. But if you consider the bigger market structure, you can see that we're making higher highs and higher lows, right? So that structure is still intact. So we don't know yet, and there's no way to know this, right? How far this needs to go. Let me get this straight, right? We don't know how far this counter trend, this retracement will be before it continues, but the most likely way of least resistance is is the continuation, the following the trend, right? So that is something we need to keep in mind when we consider EU. Now there is something else. Let's go to the lower time frames, right? If we go to the lower time frames and let's look at that. All right. So what do we see? There was, I think, Jonathan mentioned some very important things about the confluence of higher time frames, multiple time frames being aligned, right, or in confluence with each other, because that is where the higher probability is. And if you think about that, what we want to be following, we want to be seeing, since we have the weekly and the monthly bullish, what we want to be seeing is that the lower time frames, the daily and the lower than the daily, right, the 4 hours, that they switch as well into bullish market structure. The daily we just mentioned, which is these pivotal points, right? The daily is in a counter trend, right? A bearish trend, which is a counter trend to the bigger trend, which is bullish. So we want that to switch back to bullish, so that we have alignment from the weekly, the monthly, and the daily as well. And that hasn't happened yet. So that's something we need to keep in our at the back of our mind, that when that happens, we have those higher time frame alignment. But what you can see is that within this trend, this bearish trend on the daily, what do we see? We have this structure, right? We have a change in, right? This is higher high. That is already a higher high. It makes even higher, right? That's the head, the left shoulder, and it comes and breaks this structure, right? And it does that, and it continues to make a lower low. And that's fine. But now we have a reversal pattern, which we can trade when it comes back to any relevant structure, right? And that relevant structure can be this H4 order block we have here. We have in the past, I think this was NFP, yes, that created this much bigger order block, which to me is an entry order block, but it's too wide to use. But since we have already a structure, a more narrower structure in the same area, I can use the smaller one for refinement. So this is what I'm looking for right now. I know that the higher time frames, the weekly and the monthly, are bullish, so it's likely that eventually we're going to keep on going much higher. But right now we are in a daily downtrend, right, making lower lows as I just showed. If that is true, then the H4, the time frame that I start looking for my setup, I need to be, seeing if I can continue or join that downtrend bearish trend on the daily. And I already see that break of structure, which I just mentioned. This is the neckline, right, on the H4. So that means that I'm looking to see if this area can be the beginning of a reject, if this area is going to be rejected. And if it is, then I have the reversal pattern. And if that is going to happen, then I would be looking to catch. And I think this is the move for perhaps maybe even today, but this week likely. If it holds, if this area holds, then we could see something in this idea where you have the daily downtrend is continued, and if it is continued from this area, right, where should it, in any case, right, if the downtrend will continue, what's the next thing that price will do? Price will make a lower low, right? That's the hypothesis. The hypothesis that the continuation of the trend, right, the market structure will continue. If that is the case, then it's going to take out this low, right? And the area to be trading would be, in my way of approaching the market, is getting a reversal pattern at this relevant area. So this would be the area that I'm going to be looking for that reversal, right, on the H4, right, this order block, right, that one. If and price currently is not showing any signs of slowing down, so you have to be careful. Does it just a trading idea, but it needs to materialize. We need to see that confluence coming into the market for the lower time frames as well. And that's the importance, right? That makes it the probability go higher. If it's going to reverse from here, it needs to start slowing down, and it needs to start forming reversal patterns on the lower time frame. If it doesn't, it's not going to reverse. It's going to just continue and break that area, right? And that hasn't happened yet. If you look at the H2 and the H1, we don't have any reversal from this area yet. And that's the keyword, yet, because we have news this week, and the news could be the beginning, the ignition of such a reversal, right? So what I'm going to be looking for is, are we going to have, perhaps with Wix, because this is news, do we have some kind of a reversal this kind of way, right? As long as we don't have an H4 or a time frame closing above this area, it is still valid. So if this happens, then I want to be on the right shoulder of that quasi, catching that move down. But I have to wait for the market to tell me that it's going to do that. So right, patience is key here. It's not because I think it might reverse here. It actually has to show us through forming reversal pattern on multiple, right? There you see that multiple time frame confluence. Again, it has to show it on multiple time frame that it wants to do that. Because I know, and you guys know this as well, if you have multiple time frame telling you the same thing, it's very likely that's going to happen, because that's how the market moves. It's fractal, right? If it's going to change direction, it's going to change it on the 1 minute, then on the 5, right? Break structures on the 30 minutes, and then on the hourly. When you start seeing that, and you have on the H4 already a plan or a possibility, a setup for a short, and the lower time frame, they align with that H4 and the daily, you know that your setup is high quality, high probability, and that's the moment you should be ready to get into the market with your trade.
Can I ask you a question there? So I think
Sure.
basically what you just showed was something quite similar to what I talked about, but instead of you
Sure.
adding horizontal levels, your horizontal levels are basically order blocks, and you're waiting for price to approach an order block, and then you look for a break of structure. But on what time frame do you want to see that break of structure?
Well, on the H4, let me put it this way.
But you
On
can't
the
get
H,
I mean, here on the H4, a break of structure would take quite a long time. And I mean, the way I see it, the break of structure in the 4-hour happens way further down, right? Okay, so you're looking at that whole structure. You're not just looking at the recent
we
up move.
already had the break of structure here, right?
Right. Okay.
We broke that structure. We came back and we made a lower low, and we may be revisiting this on our way continuing lower. If that scenario is going to materialize, if it's going to be true, then this is a good area to be shorting from. So the break of
Okay.
structure already happened, since this is a H4 quasi. right? That's the bigger structures. Normally, I start with the H4 as an order block, not as a
So
break of structure. But in this case,
you have to reframe the question a little bit. So I do
okay,
see the breakup structure in the 4 hour, but when it comes to entry, what
okay,
is there anything you look for to confirm entry? Like
yeah, I think
when
that's a
are you
yeah, I think
so
that's a
so
great
basically what
question.
I'm saying is when are you putting in the orders in MetaTrader?
Okay, perfect. I think that's a great question. So the way I have broken down my system is the following. I need a reason on the H4, a reason on the H2 or the H1. Then I go to the minutes for my entry. And this is separate whether or not I have a daily or a weekly signal. In this case, let's go to the daily. This is not a daily order block, not a fresh one, this area. So I don't have a reason on the daily. So the daily is discarded. And since the daily is discarded, the weekly is irrelevant right now. So I don't have anything on the daily, the weekly. I only have on the 4 hour, which is that reversal pattern. That's one thing. Okay. So, and I ask myself, do I have a reason on the H4 to go short here? And yes, because of the reason I just mentioned, the break of structure, the order block that is still valid, right? The H4 has not invalidated by a close above it, so it's still valid. So I'm still going. That is a valid reason. So I got the H4 already. Then I go to the H2 and or the H1 to see if I have a reason as well. And right now, I don't have a reason on the H2 or the H1 yet. So that tells me that I have to wait. Uh, if I take the H2 for example, I don't have a reason here to go short. Actually, that's not completely right. If I consider this, let me see, this structure, right? We did have a break of structure, but it doesn't help me because where is the area? What's the order block? That's this order block, right? And that's way wider than the actual H4 that was already too wide. So that's to me that's something that I can't use. Right? I need if I go the reason that I go to the H2 and H1 is for refinement of that area. And that doesn't help me. So that's not a valid reason to go forward. So H2, I don't have a reason yet. I would have to wait for perhaps a outside bar or a bearish order block being formed, a fresh one, and it has to form in relation. Let me get this in relation to this order block. So it could happen like now, like after when this one, if it closes below here. Let me get the magnet out of the way. If the next candle or this current candle closes as a bearish engulfing, right? And let's say it closes here, uh, right? If it closes there, you agree it will be a bearish engulfing, right? And if that happens, it did tap into that H4 order block. So I consider then that I have the H4 interaction with and the valid reason. And on the H2, it would be confirming that this area is being rejected. If I have at least two of those things for the H4 plus the H1 or the H2, then I'm allowed to go to the lower time frame and I will start going to the, let me get this out of the way because it looks a bit crazy. Then I can go to the lower time frame. And the question you ask me is, when do I put in the order? Well, the order is when I need the H4, H1, and or H2. When I have those two, those two criteria satisfied, I can go to the minutes, right? And I go to the minutes, and the highest point that would be the head. Okay, so I'm gonna do the same thing I did for looking for the quasi. So this will be the head. If this is the head, I ask myself, do I have a break of structure? And on the 5 minute, I don't. Right, the neckline would be here. Let me get this straight. Oh, I don't have the magnet on, of course. But now that's the break of structure for the 5 minutes. So I don't have a structure. If I don't have a structure on the 5 minute, I have no reason to assume that this is going to reverse from here. So I'll have to wait. I go to the 3 minutes. Do I have a break of structure? And I do have a 3-minute break of structure, which will come in here. Because the idea is I need to have that confluence, the multi-time frame confluence that you talked about. If it has a reason to bounce from the H4 and it has a reason to bounce there from the H2, then, and on the lower time frame, let's say the 3-minute, it also is reversing from a key area, right? Let's say in order block here, that could be a reason for me to enter, right? When it rejects this. But in this case, we don't have the H2 yet, right? The H2 hasn't given you any reason to go short. So what I'm looking for is alignment on the H4, the H2, or the H1, and then I go to the lower time frame. I want alignment rejection of that, of a structure, a break of structure on the lower time frame as well. When I have that, I know that my probabilities, right, the theme of today's live stream, my probabilities are high because I have multiple time frame in confluence, in alignment, telling me that this could be a reversal point. And if it is, then I will go to the area. Where is it going to head? The whole structure, the target would be, in this case, the lowest point, or something that is relative. That would be my TP. That would be my TP right there. And if I get on the 3 minutes, you can already see that it's going to be a huge win, right? If I'm going to, let's say, assuming that we actually get an entry here, even if the signal comes in a little bit lower and I have somewhat of a wider stop, to me 8 is okay, but it's not exactly tight. And if we have if you target the whole structure, which I just mentioned, then you can see how this can be a monster of a trade. But everything has to line up. It's not, you can't find these trades like every day, not even every week. But they will come from time to time. And my job, in any case, is to just be patient, wait for everything to align, and take the trade. That's it.
I think that's a very good. Be patient, and exactly wait for everything to align. I think that is super important. I want to do one of the giveaways. Do right now. Let's go. Are you guys ready?
Let's go. I'm ready.
Oh. All right, Barry. No way. Is that the guy who actually passed the account? Nah, is it? That would be pretty crazy. Guy just got funded with 100K. Here you go. Take another evaluation. All right. Congratulations. Yeah, it is. Is it really? Is it you? Let me know. Is it you, Barry? Wow.
In any case, congratulations, insane. Barry. Make good use of it.
What a day. What a day. You got funded today and now you won the giveaway. That's crazy. That's luck right there. That's funny. Okay, congrats, Barry. You used 1 credit to buy a 20K bootcamp account. You can use that credit however you want. Get another account. You know what? Get another account, get another evaluation, trade that evaluation until you start the funded account. I actually think that might be a good idea. And you know what? Now you have the opportunity to have 2 accounts. So all your shitty trades that you're not supposed to be taking, maybe take that one on the new account and only stick with the actual good trades on the funded account. And you might hear that and say, oh, that's a stupid thing to say. Well, actually, having kind of like a throwaway account in trading can be a good thing, actually, because sometimes it is really, really difficult not to take a trade. And if you have to take a trade, better do so with a trade where you're actually not going to lose a lot. Okay, Barry, congrats. That's the one. We're going to do one more, but we're going to be doing that a bit a bit later. What
One
do
one
we?
more. Do we have a certain limit or a certain level of likes do we need to reach to do the next one?
Yeah, 200, and we reached that already. So yep,
Oh,
that's
okay, I
it.
see. Nice.
Just gonna do one more a little bit later. Nice. Congrats, Barry. Got
We have
one more coming up.
we have one question here
Yep.
from our good friend, regular on our show, asking what's the longest period of time you've waited to enter into a trade?
Good
The
question.
whole day, the whole day,
The
because
whole day?
that's what.
That's not more
Yes,
not more than a day.
I don't see it.
Right, right.
I don't see it as I see it each day differently. So um, mm, I do have days, and it happens with some frequency where I don't have a trade, and I can see the trade, the setup forming from the beginning, and sometimes the day before, and I'm waiting there patiently for everything to line up. And as you can see, since I'm very selective, it doesn't happen all the time. It doesn't happen most of the time, right? So and at the end of the day, and it happens with some, I think, once or twice every 2 weeks, where I don't have a trade and I have a setup coming up, but it doesn't signal, right? And if that doesn't happen, then I let go. I don't even think about it. Just how long it takes, how long the waiting time is. I don't think in those terms. But tomorrow, the next day, I will do the same thing. Tomorrow, it's just, to me, it's just another day. It's not necessarily a continuation of the first day, although I can see that it could be seen as such. There is another question here.
I just wanna mention one thing quickly here. The way I look at it, like the way I mean, I can wait for trades for a very long time. I mean, you look at Euro NCD here, for example. When I'm doing my weekly trade scanning, and I also want to quickly answer a question right before after this one that's kind of like related to this. But um, what what I do is I look at this and I do my trade planning. Now I might look at this and say, well, you know what, there is a level here. Um, well, let's assume I missed that trade, right? So the level above that I'm interested in trading is around this level, and I'm not interested in taking any other trades on Euro NCD. So this is on August the 29th is when I might realize that you have a level up there, and the level gets hit, and I'm still waiting for that confirmation for this trade. So down here, I might look at that level, and that's the beginning of the month. So for me, I'm putting alerts at levels of interest, and that those alerts might hit, in a couple of days, or even 1 or 2, or maybe sometimes even 3 weeks. And this also leads me to the question of why I'm trading multiple pairs. Well, if I see a level and that level is going to get hit in maybe 1 or 3 weeks, well, obviously I need more pairs to look at. Otherwise, I'm not going to have enough trades to make money. And the notion here that 1 or 2 pairs are good enough to be profitable comes down to your trading style. 1 or 2 pairs for me is not enough to be profitable. I mean, profitable, yes, but not make enough money to actually make a living trading. You know, I might be taking one trade a month or one trade every other month if I look at 1 pair or 2 pairs, and I need to risk way too much per trade to make that worth the efforts. And I want to also mention this one: why trade multiple pairs? Most of the successful traders trades only one pair. I don't know where you're getting this information. I know one trader who only trades one pair and successful doing that. I know a lot of people on social media. I know a lot of gurus out there. They say like, "Oh, one trade is all you need. One setup is all you need." But I only know one trader, and I know a lot of different traders, but I only know one who's massively successful with one pair, and that's GBP USD. But other than that, everyone else I know trades multiple pairs most likely. So the idea here that you need one pair to be successful is, yeah, if you have a strategy where you're successful trading one pair, you're mostly on the lower time frames because you need more opportunities to be able to. So trading is not black and white. You can trade 4 pairs, 2 pairs, 1 pair, or 200 pairs if you're using an indicator to give you signals when it's time to take a trade on said pair. Now, there's not 200 forex pairs out there, but you know what I'm saying. So when I see questions like this and statements like this, I know that this person saying this does not have a lot of experience in the world of trading, because someone who's been in trading for many years and have the experience knows that it's possible to be profitable with thousands of different approaches, trading systems, and different trading pairs. That's very important to remember, guys. If you see someone on Twitter or YouTube or whatever, and they say you only need one setup on one pair to be profitable, you have to always add after that sentiment, for me. Okay, remember to always add for me. I'm profitable trading this, and this is profitable for me. It's profitable trading one pair for me, right? But for you, your reality might be very, very different. So having that black and white thinking is like you're easily getting stuck in a mindset. If you have a mentor that's telling you only look at gold, you're only supposed to be trading gold. You're not you're not given the opportunity to achieve your full potential as a trader, because you might be super profitable with a specific trading strategy but on 10 different pairs. So it's important to
Yeah,
remember
yeah,
that.
I think there is a interaction between the number of pairs you trade and your the quality of your execution, and that depends on your strategy and the time frame of your strategy. If you are on a high time frame, then having multiple pairs will not affect your execution maybe as much, or maybe not at all. But if you're on the lower time frame and you're trading manually, there's only so many things you can do at once, and uh, it will be something detrimental for the quality of your execution if you have to be pending of multiple pairs at the same time. So I think there's that interaction, depending on your strategy, what's the frequency also of your signals. If your signals come in 10 signals a day, there's no way you're going to be trading many pairs. There's no way I mean, either, your strategy has to be so simple that there's no management, there's no waiting time. You just wait for a signal, you enter, that's it, and you have nothing to do about, nothing to do to the strategy anymore. Just enter and let it go. That I can see you can do perhaps 10 trades a day. But if you have to, you know, read price action, wait for your entry signal, enter, and perhaps um, have different scenarios for your trade management depending on how future price develops, there's no way you're going to be doing that on 10 different pairs on the same day. That's just, it doesn't make sense. Or if you do that, you will have a drop in the quality of your execution. So it depends on the frequency of your signals, it depends on the time frame you're trading, and depending on those things and the strategy, of course, that you will be able to use multiple pairs. But in a lot of the times, what I've seen is, depending on the strategy, but what I've seen is, for a day trader, it's good to stick to something that you're able to execute almost to perfection, and that is the limit that you want to, that's the goal, that's the level you want to be hitting. And that is with multiple pairs, then sure, you can do multiple pairs. And if it's not, then you shouldn't be doing multiple pairs, just one or two, or whatever number you can handle without it affecting the execution. I think those are the things. It's not like one size fits all. You do have to just be on one or multiple at the same time. It depends on those factors, I think. There are a couple of I think you're muted.
Yeah.
They
Okay. So
are
we have a couple of requests on gold here, and the thing is, like, when I'm doing my analysis, if I do chart requests, it's going to be quite simple. This is the level I'm looking at for a retest. On the daily, we have a clean breakout level here on the daily. Looking at the 4 hour, that's the last immediate high pre-breakout on that candle right there. This is what I'm looking at in gold. I'm looking for gold to come down here. If it doesn't come down here, I'm not going to be trading gold. Simple as that. If you look at the previous breakouts on gold, we haven't had any retest up those levels. So more likely than not, there's not going to be a retest for gold here. But if there is a retest, I'm going to be trading gold. And then that's just the way I look at the markets. I'm not trying to trade gold. I'm not trying to, like, I'm not going to trade gold if gold doesn't give me the setup that I need, right? That's why it's
that's
much
how
more interesting to see you do chart requests, because you actually look at, you look at multiple time frames, you add order blocks, and you actually spend more time analyzing the chart. But for me, when I do my weekly market scanning, I go through about 40 pairs, and if done correctly, efficiently, it takes me it takes me less than 10 minutes to go through 40 pairs, because all I do is just add a level, add alert, add a level, add alert, and then go on to the next one. So I'm spending very little time doing actual technical analysis when I'm in my trading.
Yeah, that I think that's something to consider, right? Depending on the strategy, the workflow, the steps you have to execute your plan, you may be able to do that, on multiple setups at the same time, because it takes a lot of time for each one to develop. But in my case, as I trade, for example, on the minutes, there's no way I can handle multiple pairs at the same time. As it's something. I think it's logical. There, it depends
Yeah.
on the workflow. And so, but we do have a question on. Let's see. There's one question here. Would you like to answer that,
Yeah,
or would you
sure.
like me to do that?
Yeah, okay. So the importance of first of all, do you have multiple monitors as well, right?
Yes.
Yeah. Okay. So the importance of having multiple monitors. So the thing is, there's this unwritten rule in trading that says, the more monitors you have, the more money you make, and that's, I believe, that's somewhat true. But I would say you want to have at least two monitors when trading, because it will make your life much easier. Now, the thing with two monitors is, if you're going to have two monitors, I would recommend having three monitors, because it's just easier to look at three monitors than to look at two, because if you have two, you're never going to be able to look at the center of it, and you got to think about how you move your neck and those sort of things. So I do recommend having multiple monitors. Now, if you do have a desktop PC and a laptop, that could work as well. But for me, it's very important for me. Like, if you're, let's say you're a day trader and you're trading lower time frames, having the price feed and having the chart on one screen while doing other things on the other screen can be very helpful. If you're in if you're scalping or trading lower time frames, having a look at price while also doing something else is very effective. Also, when you're back testing a strategy, you want to have, trading view on one screen, and then perhaps a back testing template on one screen. When you're reviewing your journal, you want to have your journal on one screen and trading view on one screen. It makes it so much easier as a trader if you at least have two screens. Is it important? For me, yes, it's actually very important for me to have at least two screens as a trader. It's my workstation. It's part of my work workflow. And like it says right here, monitor doesn't affect overall. For me, it does. For me, it absolutely 100% affects my overall performance if with multiple monitors. I know that sounds weird, but it's kind of like, if you're a professional tennis player, does it care what type of racket you have? Of course it does. Of course it does. So I think Very
I,
important.
yeah, I think it depends on the strategy and the information you need to apply your strategy. Because I can see, if you're on the higher time frames where it doesn't really matter to have, and you only need to wait for your signal on one time frame, and I can see how you can do that with just one monitor. But if you think about it, you want to have your work environment have less friction possible. And if you have to change from the chart you use for analysis, and you have to switch to your terminal, which may be on a different broker, or a different window, and you may have another window, perhaps watching news, calendar, perhaps something else, you can already see that it's going to cause friction if you have to switch all the time. If you're in the higher time frame, that may not be much of a friction. But if you're in the lower time frame, you want to be switching from one window to the other one with just the move of your eye, right? That's no friction almost in that. But if you have to click, or do something on your keyboard to be able to switch between, or on your mouse, there's a little bit of friction there. And if you're doing that hundreds and hundreds of times a day, you can already see that it's going to cause you some energy, and that's not frictionless, or that's going to be it's going to be tiring at a certain moment. So you want to have as many monitor that you need to do everything frictionless, and that usually is more than one monitor. So multiple monitors, yes, but do you need like 6 or 8? I doubt that, because I don't think so. But it depends on how many things you need to be watching for your strategy. In my case, for example, I watch uh, 4 different time frames for my execution: the 1, the 2, the 3, and the 5 at the same time, simultaneously. How am I going to do that on the one monitor? I could, but I have to resize everything much much smaller. And then I don't have any space to see anything else while I'm waiting for my signal. So it's one monitor is not optimal, but you don't need that many. I would say 2 3, probably you have enough already.
Okay, so what I'm going to do is we have a lot of questions here. I want to make sure we go through all the questions before we end the live stream in about 15 minutes. I'm going to do 2 minutes for each question here. Okay, let's go. We got, what's winter usually like in the trading world? For me, winter is the where I'm most active. So winter is obviously, I'm in Sweden. It's we have summer like three months a year. So obviously winter for me is quite long. But winter for me is when I'm most active with trading. If you take away the holiday seasons around the December, at the end of December, beginning of January, I think winter is most fun. That's where I'm making most of my money. It's where I'm most active in the markets. Summer times for me is when things are kind of slowing down a little bit. What about you, Victor?
Yes, I think in my case, it's not about the temperature of what the outside temperature, but it's more about the volatility. I typically we see a volatility drop in during the summer months. So that's the only thing that changes. But in terms of profitability, it doesn't change that much. I may have a little bit less on the summer, but it's all the same to me. um, it doesn't make any difference really. Not really.
Okay.
Winter, summer.
How do you handle a breakup structure in your strategy, and what confirmation for a broken structure in your opinion? Okay, so a breakup structure is you have an uptrend, and so this on gold is a good example right here. So what would be a breakup structure on gold right here, and what confirms that breakup structure? So that's a bounce of support. That's continuation of the trend. But what if we get this? Okay, so if we get this, This to me is a break of structure where we have higher highs and we switch from having higher highs and higher lows to having the first sign of a potential shift. Break this, we have equal lows, and this right here is where I would take a short trade. This is what, in my opinion, potentially, I mean, yes, the breakdown here would be really good confirmation, but this one right here, kind of, I would look at that as a possible break of structure forming. And what confirms that for me is I look at structure on the 4 hour. So what confirms that for me is the 4 hour closing above the level where structure is broken. So if this is the 4 hour, actually I would say if this is the 4 hour and you have a 4 hour candle close down here, that confirms the break of structure for me, and that's time for me to enter the trade. So I view the confirmation of that on the 4 hour. I think you were looking at something similar, right? Just a break of the higher highs and higher lows, right?
Not exactly. Let me read that question again. How do you handle a break of structure in your strategy? Handle. I don't handle it. I just identify it with a certain objective rules that are personal. So a break of structure can be yes, breaking the making a new low, let's say in an uptrend. But to me, the that's the bias, the shift in bias in trend. But to me, the break of structure, the relevant break of structure, is that quasi, and that quasi has a specific place where I have my neckline, which is based on a personal rule, and then it either it happens or it doesn't. There's nothing for me to do, so I only identify when it happens. That's one thing. And the confirmation of that broken structure is any price below the neckline for my case. So I don't need to wait for the close. It can be just a wick. As long as price has traded below the neckline, I consider the neckline broken. And then I will go to the next phase, which is identifying the most likely area that the price would reverse from. Maybe I should use my charts because
I think we want to move on to the next question. Honestly, I want to make sure that we go through all these questions, because we actually did talk about this previously in the live stream where we actually broke this down already. So if you're interested in that, you could just go back and look at the replay. This is a good question. How do you manage not to take trades for a long period? I get too bored of waiting, which results in bad trades. Okay, two things. Confidence in your strategy comes from back testing. So let's break it down, right? You want to be confident in your strategy, and you want to be confident enough to know that if I wait, I'll make more money. Okay. How do you get confidence from your strategy? You back test and you trust the numbers. Okay. So back test. That use back test and get statistics on the system so you can be confident in those statistics. If you're still not able to wait patiently, then you got to do something about that, right? So for me, that is mindfulness meditation. Okay, meditation and tell myself that I'm confident in the system, trusting the system. That's the way, for me at least, to do it. If you get bored of waiting, then you're not really trading to make money. You're trading for the excitement of trading, and then maybe you're just addicted to random rewards. So think about it. Why are you trading? Are you trading to make money, or are you trading to have fun? We're not trading to have fun. We're trading to make money. We're professionals. We're taking trades to make money, to make a living. We're not trading for the excitement of being in a trade. And you're trading for all the wrong reasons. So ask yourself that. Think about it, and make sure that you handle that. I think Victor, you're probably going to say the same thing, right? Back test and get statistics to be able to trust the system.
Yes, I think everything you said is probably very close to what I would say. I think you mentioned the right things. If you're getting bored and something is not right, because you're not supposed to be entertained by the market. That's not the reason here. You're not here for entertainment. You're here to catch the moves that that your strategy tells you that are high probability of being profitable. But
Yeah.
if you have difficulty because there is little action in your day, then maybe you should look for ways, and you can do that either by tweaking your current strategy to increase the frequency of the trades, the trade frequency, or you can add another pair. If you only get one trade per week on one pair and you only decide to trade one pair, that's all great and dandy, but that's like too little.
Yeah.
You can perhaps add another one on maybe two
You gotta
extra,
be you gotta
whatever.
be very careful with that, though. I mean, you have to be very careful by adjusting your system based on emotions like being bored. I think that could be in a lot of cases that would be negative. I would say you don't want to be.
But yeah, but it's not on the emotion, it's about the frequency, right? So
Yeah,
if your emotion is getting bored, that's not good. You have to fix that.
yeah,
But if you have a very low frequency, right, and you're fine waiting for that, but you're most of the day you're just doing waiting and not doing anything, then one idea is to increase that frequency by adding, either by tweaking your because we can tweak your most strategies, if not all, can be tweaked to be able to to have more signals. And you have to do the whole process again with your new set of rules, go through the data, and see the optimize it. And if you decide to add a pair, you have to do the same process again for that pair. You can't just add a pair and apply the data, apply the system that you optimize for one pair, thinking it's going to perform the same way with every pair. It may, but it may not. And so you'll have to do the whole process. When I say add a pair, it's not just you know just clicking on it. It's doing the whole process
yeah,
of backing and collecting
definitely.
the data on that pair as well.
Yeah, I think that's absolutely. So what you do in that case is you're trying to find something that's consistently profitable and proven profitable to fit your personality. So that is definitely the way to do it. If you feel like you're the type of person who are not patient, you can't just sit around and wait. If there's another way to do it and still be profitable that fits better with your personality, then by all means, that's what you're supposed to be doing. I want to answer this question right here about how to build patience and follow the process and what is the daily routine to develop this. So first of all, we've just talked about patience and how to follow the process. I think back testing is a great way to build that patience. When it comes to building routines and daily routines, I would highly recommend you guys check out the book called Atomic Habits by James Clear. It's a book, it's a very good book, and it's easy to understand. Okay, read that book, and it's a very simple structure for creating habits and routines. It's easy to understand, it's very easy to implement, and I promise you it's very, very good for all parts of your life, especially with trading. You're going to read that book and you're going to read about something called habit stacking. Habit stacking is super, super powerful for traders when it comes to setting up routines in trading. And there's also this thing when it comes to a trading checklist. It's the same thing. You have a trading checklist, and you have, for example, the first part of your setup initiating would be, perhaps for me, that would be price comes into a key level. Okay, price comes into a key level. That's number one. And then number two on that list, find the break of structure on the 4 hour. And then number three, find the bullish engulfing on the 4 hour. So you have a checklist, right? And each point comes after the other. The same thing is with habit stacking. So you could, for example, do for me, a habit that I have, 9 a.m. in the morning, I walk into my office. Okay. Every day at 9 a.m. in the morning, I walk into my office. Okay. So habit stacking would be every time I walk into my office, I'm going to meditate for 2 minutes. Okay. So that's, I'm stacking one habit on the other, walking into the office, meditating for 2 minutes. When that's a habit, I can add another habit, walk into the office, meditate for 2 minutes, write something in my journal for 5 minutes. Okay. And then you can do the same with trading. 9 a.m. in the morning, I'm going to scan the markets for 10 minutes. Right after scanning the markets, I'm going to back test my system for 1 hour. Okay. So things like that, habit stacking is super, super powerful for traders to build a routine and a habit so that you don't have to think about being consistent. You don't have to think about being profitable because you are consistent, as in everything you do. And that's super, super important. Okay, what else? What else do we have here?
Another another
Yeah,
good tip for to build patience is by writing in your journal. Um, for example, if you have, this is given assuming that you have data on your strategy and you've done the back testing and you know how profitable it is. Now, when you follow the plan and you are patient, you will have a certain result. Hopefully, it will be very close to the results you had in your back testing. And you should be reviewing that and make that link. When I am patient, I wait for the actual signal. I don't overtrade. This is the result I have. Now, do the same when you're not patient. And when you're trading not just the signal of your strategy, but you think, no, I'm going to take another trade or maybe two more or whatever number extra. And review that performance and identify those trades. These are impatient. These are not extra signal, extra trade. They're not in my trade plan. And compare those two, the results you're getting when you're patient and we're not so patient. And looking that, uh, uh, comparing that one to one should help you to be more patient, because what will probably happen is that when you're not as patient, you will not be profitable or not as profitable. And when you see that, right in your face, you will say, why do I, try to do more, but I end up doing less? And that link, and next time when you have that urge to go to trade extra without any signal, you'll say, okay, if I do this, what can I expect to achieve, or what can I expect as a result? Less profitability. I don't want that. So I have to, let's stick to the being patient. That's one thing, that I make that link between the results that you will be getting when you're impatient and the results you will be getting when you are patient. And having that link, that result present, as much, I'll be aware of that, mindful of that as much as possible.
I got a quick question I want to answer here, and I'm going to answer it simply by showing you guys right here. So let me quickly bring this up. That's the one. So, what is the percentage in bootcamp funded to you get when how much profit do you get? So, when let's take this one for example. So, when you're starting out, you're getting a 50 split, and then it goes up to 75% for you. And then when you reach right here, for example, you reach the 2 million mark in funding, it's 80-20, and then above 2 million, it's 100% profit for you. So it's quite amazing actually. You're going to be able to scale this account to 4 million, which is just insane. It's pretty cheap account, and you're able to scale that to 4 million. And when you reach, imagine having a 4 million account, and it's like all the profits are for you, like it's 100% profit for you. So yeah, that's the deal. You're able to get 100% of your profit, which is pretty cool if you ask me. What else do we have here? Yeah, so we're running a little bit out of time, but we do have. I want to cover this last. So we actually did go through all the questions here today, at least most of them, which is pretty cool. So I'm going to go this question is quickly, and then we'll do the giveaway. So, if you think using 1% per trade is too low to grow the account, you're thinking about risk management in a very you're doing yourself a You're not doing yourself a favor by thinking in this way. You're going to blow the account if this is the way you think about your funded account. If you risk 1% per trade and you think that's too little, you have to reconsider your whole risk management strategy. In my opinion,
Yeah.
for most of the professional traders that I talk to, risking 1% per trade is way too much. Way too much.
Yeah, you're doing yourself a disfavor because risk
Yeah.
management is much more. It has more depth to it than just 1% of your balance. Because I assume that's what you mean. I'm referring to the user here, H Alvarez. If yeah, what it's there's more to it than just a certain specific percentage of your balance.
All right, guys, let's do the last giveaway before we wrap this up. I also want to announce that we got Anastasia coming up on Wednesday. So I know you guys have been asking for her, and she's coming this Wednesday. It's going to be great live stream. We're going to see how if she has any nice setups for us. And all right, let's do a new draw. What day is it? It's the 16th. One more winner. Let's go.
Good luck, everyone.
Smiley T, that's it. All right, guys, we got two winners today. We got Smiley T and Barry. Barry has a lucky day. Pretty cool. He won an account and he also got a funded account today. He passed his evaluation. Smiley T, I'm not sure if you're in the live stream right now. I'm not sure if you're in the comments. Hopefully you are. Let us know if you are in the comments. I have this idea. Guys, where I might announce the winner, and if that winner is not in the live stream, we're gonna select another one. So make sure, guys, that you can't just come in here, get into the giveaway and not be in the live stream. So going forward, probably starting next week, we're going to do it so that you join the giveaway. We pick a winner. I give it 1 minute. If you have not responded in the comments within that minute, we will do another draw for someone who's actually in the live stream. All right, guys, we're at over 2 hours right now. I'd like to thank you all for joining here today. I think it was a very good live stream. We showed some really good stuff here. And most of all, and more important, is we went through all the questions here, and we had a lot of good questions from you guys. So yeah, thank you for joining, and I hope to see you all tomorrow. What are we doing tomorrow, Victor? We're just going to be doing probably some live trading again, as always. All right.
Yeah, live trading will be tomorrow's theme. Yes, I would like
take
to.
care, guys.
I would like to congratulate Smiley T with the with the account. Today will be a smiley day for Smiley T. And Alvarez,
Smiley T. You're also on Discord, Victor. Tell them about Discord.
Yes. And Alvarez, the person who asked the question about the 1% risk management, Alvarez, if you are listening to this, come tomorrow or any of our future live stream. Ask more questions about risk management, because we said there's more to it, but we can discuss that in future as well, and everyone else will be able to tag along and learn in the process.
You know what? I would also, on that note, apologize to Alvarez. I was a bit quick right there, saying, this live stream is about helping people and helping you guys become better traders. So I would like to apologize to you for just saying, you're doing this the wrong way and then you must move forward. So what I'm going to do tomorrow, Alvarez, is we're going to be spending at least 15 minutes to talk about your question. We're going to bring it up tomorrow. We're going to talk about how you can apply this better, and how, if you want to grow your account, there are ways to growing the account as quickly as possible while also looking at risk management from a logical point of view. So come back tomorrow and we'll talk about that for sure.
Yes, Alvarez. So we are here for you to help you in any way we can. So do come back, and this holds true for everyone. If you're have a specific question, things, issues you want us to help you with, because that's the idea. The idea is to help you become better, help you. This is not just for entertainment, although we enjoy entertain you guys, but it's about growth, actual growth of you as the trader. But before we wrap up, I will be in the Discord community having a weekly outlook workshop in about 40, a little less than 40 minutes. So if you're part of our community, come join us, myself in the group. It'll be fun as always. And if you're not a member yet, the only thing you have to do to be a member is to buy an account with the Fivers. In your
Yes.
hub, you will be able to have the entrance. It's a little icon where you can click, and that will be able to let you in the Discord community. I bet it'll be the best trading community you'll be ever part of. That's our Discord. So on that note, thank you for being here. We see each other tomorrow.
That's it, guys. Take care, everyone, and we'll see you all tomorrow. Bye.
Bye bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check